how many of you would have guessed that AOC, Donald Trump Jr., and Ted Cruz all would have agreed on the same thing in January 2021, and that one thing would be GameStop? I'm guessing absolutely negative of you. And here we are still talking about GameStop. This is part two. We did part one earlier in the day. So let's get you up to date on what's going on with GameStop. And is this illegal? Is it market manipulation? I don't know. We've got a quick little explanation from one of our friends on Twitter on what is going on. And then we're going to jump in and actually talk about are the things that are happening illegal? What's going on with Robinhood? Why did they stop trading? And also some of the things about tech and power as well. So let's actually just hop right in here. I'm just going to share my screen. All right, here's a quick little explanation.
So I have been seeing a lot of people online who are like, what is going on with the stock market? Is there anyone who can explain this in normal person terms, but goes down? But then there was this online reading club that was like, oh, well, not today. We want hedges too. And so
everyone is basically a little bit confused with what's going on. So essentially what's happening is there's something going on called a short squeeze. So typically and historically, a hedge fund or investors will bet that a stock is overpriced and that they think the stock is going to go down in price. And that's called a short sell. So when you short sell a stock, you're basically selling the stock today, or you're borrowing shares, and then you have to buy it back in the future. So you actually make a profit when the stock goes down because you're able to buy back that stock in the future. And whatever the difference is between where you borrowed the shares and where you're actually buying it back is your profit. So what's happening is these hedge funds short sold a stock, and now all these people in Reddit have basically bought up the stock, which is helping to drive it up. And when the price goes up, the hedge funds actually have to buy the stock at a higher price and they lose money. And when they buy it at a higher price, it snowballs and the price goes higher and higher and higher. So you've got all these normal retail investors, everyday people like you and me that are buying the GameStop stock and also AMC, Nokia, a bunch of different names. And it's causing the hedge funds in some cases to go bankrupt, but it's also just creating a ton of volatility in the market. And the price is just going up and up and up and up. Today, it dropped about 40%, but it's already in the after hours market up back to like 300 or something like that as well. So essentially what's going on is all these hedge funds and all these like institutional investors are a bit mad because all these real people, regular people are actually, causing them to lose a lot of money. But here we've got AOC, Ted Cruz, and Donald Trump Jr. all agreeing. So let's actually just walk through these tweets really quick, and then we're going to kind of explain a little bit more about this. But we need to know more about Robinhood app's decision to block retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit. So basically what happened today is Robinhood, the app that I've never really been a fan of, and Robinhood is supposed to take from the rich and give to the poor. They're kind of doing the opposite, where they basically blocked certain users from being, or actually all the users, from being able to actually buy more GameStop options and stock, and they only allowed them to sell. So essentially what was going on here is that Robinhood has certain regulations that say they need to have a certain amount of money when people are trading stocks, and when a stock is really volatile, causes them to need more money. So Robinhood essentially was about to run out of cash today from what we've seen in the news. And so they had to shut off a lot of trading. So it doesn't really give the best name to Robinhood, because basically what AOC is saying here is that all the hedge funds and all these institutional investors were still able to trade the Robinhood stock as they wanted, but all the Robinhood investors, or the GameStop stock, but all the Robinhood investors basically weren't able to actually, purchase the stock anymore. Stock dropped today, but now it seems that Robinhood is actually opening it back up for tomorrow. So who knows what's going to happen? I'm recording this video on Thursday night. So when you're watching this on Friday, tomorrow is actually today. So you're in the future. Welcome. So basically that's what AOC is saying. And then what the heck is this? Ted Cruz says fully agree. What? Ted Cruz is agreeing. And then Marianne Williamson, it's getting weirder and weirder. No one knows what's going on. This is all so wild. It took less than a day for big tech, big government, and corporate media to spring into action and begin colluding to protect the hedge fund buddies on Wall Street. This is a rigged system. This is what a rigged system looks like. So what also is happening with Robinhood and them actually restricting trading as well is, according to some regulations and like federal regulations, they are designed to, in quotes, protect retail investors, such as a requirement that brokers must not offer customers investments they don't understand. What does that actually mean? It's honestly a super gray area. Like, how are you supposed to know as a online trading platform or as a broker if your customers actually understand certain investments? And I will say the trading in Robinhood is extremely speculative, really risky, and a lot of people probably will lose money, and it will probably not be the hedge funds. It will probably be normal people, which is unfortunate. But at the same time, who are these online trading apps to be able to decide if you are actually educated? It's not like they're giving you a test, an exam, and you have to get a certain grade on it to be able to trade options. But at the same time, it's like they're trying to protect investors, but by doing that, they're actually hurting investors a lot, at least specifically in this situation. So there's a real gray area there, but that's also just kind of one reason that this might be happening as well. Then you got AOC again. Got to admit, it's really something to see Wall Streeters with a long history of treating our economy as a casino complain about a message board and posters also treating the market as a casino. So basically, again, kind of what's going on here is we've got this situation where historically, hedge funds or institutional investors, they're seen as manipulating the market, but a lot of times they do it in a way that's not really illegal. And we're going to talk about the definition of what market manipulation actually is in just probably like 1 minute here. But what historically will happen is, an institutional investor might buy a stock and then they'll come out with some new price target just to get the stock price to go up, even though they believe in it. They're really just kind of getting the stock price to go up, and then they might sell at a profit. And then someone that's going to buy the stock, it's then going to go down, and that person, usually a retail investor, is actually going to be the one that loses. So there's always this weird gray area of not necessarily collusion, but kind of gray area of market manipulation. Then we've got the next one, Robert Reich. If Redditors rallying GameStop is an unacceptable market manipulation, what would you call it when greedy Wall Street bankers gambled away our entire economy in 2008 and faced no consequences? So again, it's a little bit of hypocrisy. Like, should one group be doing it? Should the other not? No, like no one really should be doing market manipulation. But this is a point basically where in 2008, the big banks and all these institutional investors screwed over a ton of people in the subprime mortgages and all the different things that you can watch about in The Big Short. And it really screwed a lot of people over, created a huge economic issue, and then they were all bailed out, or there weren't really that many consequences that were actually put on people. So here you are kind of going back and where the retail investor, the real person, the poor people, as according to Robinhood, are kind of controlling the market and seen as manipulating it, and they're facing the consequences, whereas these institutions aren't. So that kind of gets back to the problem of what everyone on the Reddit Wall Street Bets message board is talking about. So let's actually dive into what is market manipulation. So market manipulation, according to this, I'm just going to read this off. Market manipulation is the act of artificially inflating or deflating the price of a security, stock, company, or otherwise influencing the behavior of the market for personal gain. So essentially what we're doing, or what you would be doing with market manipulation, is you're almost like putting out fake news so that people will either buy or sell a stock and you're able to get a better deal on it. You're kind of using information that you put out to benefit yourself. So here's just kind of another example as we scroll down. So strategies such as value investing and in a very good general sense, entrepreneurship are based on discovering and acting on such opportunities in order to reap profits. So if you think about value investing, which is just buying companies at low prices, and also entrepreneurship, a general business practice is to buy companies that are undervalued, and then you get to profit on that, displacement of what the value actually is. But what happens is basically when you, in this case, instead of discovering existing opportunities for profit, the goal of the market manipulator, the illegal activity, is to deceive other market participants in order to create a better situation where assets are mispriced so that the manipulator can profit from the situation. Market manipulation may or may not make false statements as well, but it involves on acting to influence prices in order to create a false impression among other market participants. So this is like the example I explained before, where a lot of times, price targets that come out, you'll get all these analysts that'll say, oh, I'm increasing my price target to $110 from $100, whatever it might be. And those are really tough to actually trust. One, no one's ever going to know what's actually going on in the market in the next 12 months. Like, no one would have foreseen the pandemic. No one would have foreseen this GameStop situation even a week ago. But these, like, I use the price targets as an example because here's how it could work. Like, let's say a big hedge fund buys 1 million shares of a company for $100. Okay. So they buy 1 million shares for the company. They think it's valued at $100. And then all of a sudden they kind of do a little bit more research and they realize, oh, the company is actually worth $90. So they bought it for $10 more than it actually was. So they still want to make a profit. So what they might do is that one of their analysts will come out with some report and say, oh, like, we've discovered some new information and we actually are going to raise our price target to 110 for this stock. Then all of a sudden people are like, oh, wow, there's a 10% upside. So everyone goes and buys the stock at 110 or buys the stock and the price rises to 110. The hedge fund sells at 110. And then all of a sudden, so they get that $10 profit, but then the market kind of corrects itself naturally and goes back to the actual value price of what would be 90. So in this case, the hedge fund is essentially manipulating the market with certain information that they're putting out that they don't really believe. It's falsified and a little bit, falsified, basically some fake news that they're putting out. It gets other people to lose money and they get to benefit on those other people losing money. So that's essentially what market manipulation is. Is the Reddit community doing it? There's probably a bit of market manipulation in there. I actually don't know, and I'm not going to I don't have a legal opinion on it. But it is interesting how, like, doing it with a hedge fund compared to the Wall Street, a forum with 2.5 million people. I don't really know how to compare those two, but that's generally the idea of what market manipulation would actually be. So 2 more things. Let's go through. These are kind of important things. So essentially what's going on, when we were kind of going back to the Robinhood thing, Robinhood ran low on capital and had to make some hard decisions quickly. The securities its users wanted to trade likely generated the highest capital obligations, given how volatile they proved and how long it takes to settle. So Robinhood had to shut off some trades to stay on the right side of the capital needs. So they were pretty low on capital. This is not really a great thing for Robinhood. It's funny, also, in a coincidence, that I took all the money that I had out of Robinhood on Tuesday. But essentially, it's a little bit interesting to see that Robinhood had to, according to this, shut off certain trades because they didn't have enough capital to actually fulfill certain requirements that the regulators had. And then the last thing, these are kind of an interesting thing about tech. I think this is kind of showing there's been tons of talk about tech having so much power, not even in the stock market, but just generally with media and all this type of stuff with censorship, and who knows what types of conversations are going on there. But in this situation too, it's very interesting. So the entire episode has demonstrated the power of technology to democratize access to American financial institutions, ultimately giving far more people a say in our economic structures. So this is an interesting quote because it's talking about the power of technology to democratize access. But I think the one thing that also is not talked about is the power of technology to actually control the financial market as well. Like where Robinhood can make one decision and cause a 40% price drop because people just aren't able to access it. So it's interesting how some of these online trading platforms do have so much power to be able to make decisions that can really change a market in a split second. And the last one to go through, this is a funny one. So hedge fund CEO, I lost $3 billion, my company, my home, and now my wife, me. Have you considered budgeting? So, I mean, this just kind of goes back to the core of the idea behind the Reddit group and Wall Street Bets, where all these, normal people, real or retail investors, retail investors is more just kind of like, the normal person who's not, an institutional Wall Street investor is basically, we're always told, budget, save your money, save for retirement. And then, you got a Wall Street hedge fund CEO whining about losing some money. So anyway, thanks for sticking around. Let me know what you think in the comments. And I'd love if you could like this video. It helps me a lot. I'm trying to grow the channel. Subscribe if you like this. I'll see you next time on Quinn Talks Money.